Stocks rise another day after a lighter than expected inflation print. And it almost looked like somebody got the news leaked to the market yesterday based on futures action and pre-market action today, as the markets were up before everything opened today, with whispers of inflation coming in lower than expected, albeit still very high, and core, the main components still higher and stickier and stubborn. So leading into the thesis that inflation is going to stay higher longer. And obviously tomorrow we have the Fed that's going to come out and Chair Powell and speak and talk about, what they're going to do. Is it going to be 50? Is it going to be 75? He indicated last meeting that they could anticipate slowing the rate of rate hikes, slow the rate of rate hikes, or the pace of rate hikes. So 50 basis points is kind of what everybody read into that. He could always come out and surprise the markets with 75. You'd never know, but that has not been his style. Generally, they were going to telegraph, or they would telegraph if something like that was going to happen. So right now, the Fed has to portray itself as tough on inflation, even as it pushes through a smaller rate hike. So even with a 50 basis point rate hike, Chair Powell is going to reiterate that we're going to stay at it, that we are going to keep rates higher for longer. 7.1% is still unacceptable. And, they've got to really stay at it. So I don't think they can claim any victories on inflation yet. I think they're going to be very, very careful before they can do that, said Anita Markowski, chief financial economist at Jefferies. It adds to the argument to moderate the pace of tightening, says David Page, head of macroeconomics at AXA Investment Managers. So some people are calling for the Fed to slow down. Some people are calling for the Fed to stay at it. And a lot of people, based on their positioning and their leverage, that's going to be their narrative. So very interesting. Sam Bankman-Fried has been arrested, taken into custody, and charged with money laundering, fraud, all kinds of different things. The interesting thing about this is the fallout to the rest of the space. Now we're going to start uncovering a lot of things that are going on inside of the space with other exchanges, stable coins, things like that. So this is going to be very interesting to watch. It's a time to be very cautious and do not trust anybody or anything. Protect your capital, protect your tokens, and be careful if you are investing in the crypto space. It's a very dangerous, volatile time. Markets were way up today, as much as I think 700-800 points at one point, which would have been 2.5% on the Dow, but it finished up only 0.3%, 100 points, up 0.73 on the S&P, 29 points, and up 1% on the NASDAQ, 113 points. And like I said, the markets were up. We'll take a look at that here in the charts quite a bit today. The Dow was up as much as 34,720 at one point, breaking out of a range, and then of course retraced that move. The NASDAQ as well, and the S&P as well. The S&P had broken a major trend that has been in place for a while, but could not sustain it. Ended up closing back below this trend here. So that's not really super great news, but it tried to break out of there, but it looks like there's potential for the downside to continue. Let's take a look at the VIX. The VIX took a nosedive today. Dixie took a nosedive. 10-year took a nosedive on the inflation news. So that was all to be expected. And obviously, the markets rocketed early on when that inflation report was released. And then Bitcoin, same thing. Bitcoin had let's take a look at Bitcoin here. And, Bitcoin had a nice little pop on the inflation news, but has retraced that move, getting all the way up to 18,000 almost, maybe just above 18,000, depending on the exchange you're looking at. Coinbase, just below 18,000 or right at it. So it depends on which exchange you're looking at, kind of tickling that 18,000 level. So the real question now is this a reversal of the trend? Or is this just like what we've seen in the past and drop? And I talked about yesterday that we're going to go back. Here's Ethereum, same price action, XRP, not as big of a bounce in XRP or Cardano or Solana or Matic as we saw with Bitcoin and Ethereum and, on those inflation news. But, like I said yesterday, let's go back and look at what happened last year at this time. So it's December 13th of 2022. So last year, December, we talked about the Santa Claus rally happening in December. Let's look at where that was. Here it is right here. So December 13th, right here was a big down day for Bitcoin. So that was actually one of the areas of a low. Right in this area here, really markets continued down kind of until the 17th of December, and then went on that Santa Claus rally into the end of the year of about 15%. And then markets reversed on the 27th of December and started the downhill trend from there. I remember those conversations last year when I was letting my circles know markets had topped. That was the Do Kwon era, Michael Saylor buying in here, kind of propping things up and kind of getting this irregular price action before these final little legs down here. So will that happen this time? Let's take a look. Let's say the market drops back down to some of these lower levels. Let's just say the lower level of the range of 16.7 and bounces 15%. Where does that put Bitcoin? Right around 15% would be right around 19,000-ish, somewhere in that level. So right down in this lower range of the last leg before this drop. If there were a 15% rally from this low level that where we're at now, obviously 15% from the lows of the range, if price were to drop back down to 15,000 before then a 15% rally gets you back up to about a little over 18,000, so back to the top of the range. So that could be a possibility where price just kind of works its way back down to the lows of the range and then pops back up towards the end of the year and then finally rolls over for that last drop. Because again, markets have priced inflation, markets have priced interest rates, unless the Powell surprises tomorrow, but it has not priced earnings or recession in 2023. So that's what we're going to get into next year. Let's take traditional markets. Take a look at traditional markets in December, same thing. So if we go look at where's December 13th, back in this area here. So the 13th was, this is that area here. So it was on the December the 20th, 2021 was the low and, lower level that we had the Santa Claus rally into basically, here we are right here. So the end of December, right up in this range, was about a 7% pop. And then this was January, and just the market just kind of continued to roll over just like crypto. So that was about a 7% pop in the Dow, the S&P. Here's your Santa Claus rally in the S&P right here. That was NASDAQ, I'm sorry, that was a 7% rally in the NASDAQ, and then the S&P Santa Claus rally right here from December 20th, basically a few days behind Bitcoin, 6%. So 6% on the S&P, 6% on the Dow, 7% on NASDAQ, 15% on Bitcoin, Ethereum. Last Christmas, let's see where Ethereum was, right in this area. So Ethereum popped, let's see what that was, 14%. So Ethereum, Bitcoin, 15%. Markets moved about half as much last year, the last week of December into January, and then everything rolled over. So is that what we're going to see this year? We'll find a lot out about that tomorrow. And then as we get into the next week, then yes, you can expect potential for a Santa Claus rally. And a lot of that is there'll be a lot of tax loss harvesting. There'll be a lot of selling potentially here in the next few days prior to that end of the year, so people can lock in some losses and then buy back in next year. Again, there's a lot of capital out there, a lot of funds that need to allocate. So that could drive price action into the end of the year for that Santa Claus rally. So all eyes are on that J Powell meeting tomorrow, and we will see you on the next video.